Ladies and gentlemen, welcome to the reading report on the topic energy. The content of this report belongs to the website iea.org or International Energy Agency. My name is Hope and the report today is Oil Market Report December 2020. This report has three parts. The first part is the overview, and then we have the highlights. The last part is Goodbye 2020. Let's move on to the first part. Its name is about this report. The IEA Oil Market Report, or OMR, is one of the world's most authoritative and timely sources of data, focus, and analysis on the global oil market, including detailed statistics and commentary on oil supply, demand, inventories, prices, and refining activity, as well as the oil trade for IEA and selected non-IEA countries. That was the first overview about this report. And now we come to the highlights. The first highlight, we focused that oil demand will fall by 8.8 million barrels per day year over year in 2020, a modest 50 kilo barrels per day downward revisions from our previous report. Our 2021 demand forecast was revised down by 170 kilobarrels per day. This is mainly because of another downgrade for jet fuel per kerosene demand, which will account for around 80% of the overall 3.1 million barrel per day shortfall in consumption in 2021 versus 2019. In 2021, demand for both gasoline and diesel is projected to return to 97 to 99% of their 2019 levels. Second, global oil supply rose 1.5 million barrels per day in November to 92.7 million per day as the US recovered from hurricane shut-ins and Libya built up production. In December, production may rise again ahead of OPEC Plus increasing its quota by 0.5 million barrels per day in January. OPEC Plus dominates global growth in the near term, with virtually all the 4Q20 gains and 80% in 1Q21. For 2021 as a whole, non-OPEC producers outside OPEC Plus are expected to increase output by 400 kilobarrels per day after a fall of 1.3 million barrels per day in 2020. Third, global refinery throughputs fell almost 1 million barrels per day in October, mainly due to maintenance and hurricane shutdowns. The seasonal slowdown of refined product demand in the Northern Hemisphere winter combined with tighter crude oil markets will result in a challenging environment for refiners in the short term. Estimated product stock draws reached their 2020 peak in October and are expected to slow until the next leg of the demand recovery to Q21. Fourth, OECD industry stocks fell in October by 55.3 million barrels or 1.78 million barrels per day to 3.129 million barrels and were 183.4 million barrels above the 5-year average. Observed global stocks fell by 4.1 million barrels per day. Our analysis suggests that the global crude market will have a stock surplus of 625 million barrels at the start of 2021 versus December 2019. If we assume that Chinese balance are neutral in 2021, the market will absorb the 183 million barrel located elsewhere, and in July it will move into deficit versus end 2019. Fifth, oil prices have moved rapidly and smoothly from contango to backwardation based on stronger Asian demand and effective OPEC Plus supply management. ICE Brent futures rose 2.46 US dollar per barrel in November to 43.198 US dollar per barrel and closed at 49.97 US dollar per barrel on 11th December. Physical crude price discounts to futures improved in late November and early December. In November, freight costs benefit from a rise of tanker activity for the first time since May due to stronger Asian buying. Last part, goodbye to 2020. Today is already 2021, but let's say we are close to the end of 2020 and Brent futures prices have recently moved above 50 US dollar per barrel for the first time since early March. Indeed, futures markets have moved into a shallow backwardation looking 12 months ahead. On the other hand, physical barrels have only recently traded close to futures prices, underlying the continued uncertainty that COVID-19 is causing oil demand and market stability. The understandable euphoria around the start of vaccination programs partly explains higher prices, but it will be several months before we reach a critical mass of vaccinated, economically active people and thus see an impact on oil demand. In the meantime, the end of year holiday season will soon be upon us with the risk of another surge in COVID-19 cases and the possibility of yet more confinement measures. From the supply side, sentiment has also been boosted by news that the OPEC Plus countries will increase their production quotas in January by significantly less than planned. In the short term, oil demand remains weak and we have reduced our estimate for the fourth quarter of 2020 by 0.2 million barrels per day on small data revisions in various countries. For the year as a whole, global demand will be 91.2 million barrels per day, which is 8.8 million barrels per day below the 2019 levels and down 0.1 million barrels per day from our last report. Demand has recovered from its trough in the second quarter when it was 16.3 million barrels per day or 16.4% below the year earlier level. But in 4Q20, it remains 6.2 million barrels per day down year-on-year, reflecting the impact of the second wave of lockdowns. The recovery in the second half of 2020 is almost entirely due to China's fast rebound from lockdown. Demand there will grow by 0.7 million barrels per day in the period. The picture of OECD countries is bleak. In the same period, demand will be 5.3 million barrels per day, lower than a year ago. Indeed, Europe appears to be going backwards with demand in 4Q 20 lower than 3Q 20 as reimposed lockdowns take their toll. Globally, weakness in the aviation sector largely explains a downgrade to demand in this report of 0.3 million barrels per day to the first half of 2021. This contributes to a smaller rebound in demand in 2021 of 5.7 million barrels per day. On the supply side, the OPEC Plus countries have shown flexibility in amending their quota arrangements. Demand is clearly going to be lower to longer than expected when the supply agreement was concluded in April and there is rising production from Libya to accommodate. The agreement to increase the quota by a modest 0.5 million barrels per day each month, subject to conditions providing the headroom for more supply, is based on a recognition that the market remains fragile and is in need of careful adjustment. In 2020, we have seen unprecedented and historic turbulence in energy markets. The disruption to normal life caused by the pandemic has had a serious impact on the health and welfare of millions of people. We hoped that New Year will bring better times to you and your families. That was the oil market report in December 2020. Thank you for listening. My name is Hope.